Welcome to Mad Money. Welcome to Cramer. My friends, I'm just trying to help make some money. My job is not just to entertain, but to educate, try to teach you about what the heck is going on here. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. You want big? You want important? You want game-changing? Then you want next week. We're approaching the height of earnings season, and this time the earnings are more important than ever. Other than today's consumer price index reading, which was benign, we have almost no macro data because of this government shutdown, and that's created a tremendous focus on individual companies. Right at the moment when those companies keep putting up truly great numbers. Those numbers and the relatively mild CPI report are why the averages were today. Dow gaining 473 points. You know, it's first time closing above 47,000. S&P jumping 0.79%. 34th record close. And the NASDAQ pole vaulting 1.15%. It is something to behold here. Now, next week's a hybrid. We have the biggest week of earnings, but we also have the Fed meeting on Wednesday. I think we'll get a quarter-point rate cut. Our economy is stalling. We're beginning to see some larger layoffs, like the ones that were announced by Target and Applied Materials. And this morning's consumer price index report was tame enough to justify a cut. In other words, I think we're safe when it comes to extraneous events. How about earnings? Monday night, our largest steel company reports. That's Nucor. And I think we're going to hear plenty of praise for President Trump's tariffs that have kept other countries from dumping their government-subsidized steel into our country at excessively low prices. China wiped out most of our steel producers, except for Nucor and Cleveland-Cliffs. Nucor is the best steelmaker in the world, but it can't transcend what amounts to a sluggish environment away from the data center. In this economy, I can't expect a blowout, even as I do like the company very much. Too bad. Might be an opportunity, though. Tuesday morning, we get results from United Health. Now, maybe we can find out how detrimental these investigations into their billing practices really are. I think they'll be dismissed as not major, and the stock might start climbing like it did in the old days when UNH was such a huge Wall Street favorite. Okay, here's one. SoFi, you know, we're behind this one, right? The digital bank. It's had a huge run that you have to ask if anything can justify the move beyond where it is. The rally today didn't help. I don't know. Call me, let me say critical, because I am concerned about profit taking there. Now, some stocks have no quitting them, though, at all. And this one down here, Celestica, this company does make everything you need to make tech equipment, and they're tremendous at it. Maybe, by the way, it is the best chart in the entire stock book, as I like to say. We also hear from United Parcel, not the best stock in the entire chart. Now, this stock's been sneaking up as if there was no issue with the dividend, that they have plenty of money. Good quarter takes this $87 stock to 100. A bad one takes it right back to $80. Seems like a decent risk reward, but anyone who's stuck their neck out for UPS recently has gotten their head chopped off. You want a regular consumer stock that's been an incredible performer? I think you look no further than Royal Caribbean. This cruise line's been a winner ever since COVID ended. Now, if you want to go dicier, how about going to VF Corp? Apparel's tough, but I think the last quarter, which was not up to stuff, will be put to bed by a terrific set of numbers, this time from CEO Bracken Darrell. He's bought a lot of stock in the open market. The man is putting his money where his mouth is. After the close, we hear from Visa, all right? Now, Visa, let me just tell you something. This is a company that never misses, and I bet they won't miss this time. It's another clockwork stock, meaning you can set your watch to it. You want a stock that's moved up in anticipation of a blowout that could give you a blowout times 2? Well, that's how I feel about the stock of Seagate. Yes, the disk drive company, which is supply constrained. That's a great thing to be in this environment. More on that later in the show. Next Wednesday got me trembling in anticipation. Why? Well, this morning has a sure winner in CVS, at least from my point of view. Now, I'm betting it's much better now that Rite Aid's done and Walgreens is pulling back sharply. There's also Caterpillar. Now, this one's a little tougher for me. I fear its stock has moved up too much as a monster performer involved with infrastructure and the data center. I think it's due for some profit taking. Then there's Boeing, which, after taking a non-cash charge or two for whatever issue might be on the table, should offer a restrained set of positives that will get the stock moving higher and cement it as the most obvious winner from the trade war. That's why we own it for the charitable trust. Remember, if our trading partners want to make nice with President Trump, they need to buy big-ticket items to close the trade deficit. It seems like airplanes will do the trick. Now, after the close, the Federal Reserve's verdict on interest rates So that'll get out of the way, right? So what do we have? We have Starbucks. And I think that could be a little stronger than expected, not a lot, but I also believe the humility of Brian Niccol will be the order of the day. I don't expect a lot of great commentary. Next, you can bet that Alphabet will report a monster quarter led by YouTube, then Search, and then Waymo. There's a lot to like here. Microsoft reported the best quarter of the hyperscalers last time around, and I expect a repeat from this company. Now, Meta's Mark Zuckerberg keeps finding ways to deliver great quarter after great quarter, keying on advertising, but also spewing the gospel of the Ray-Bans that are packed with AI. I like the black ones that Renee Haas wore on our show from ARM Holdings recently. Chipotle can't seem to deliver, and it's starting to worry me, although I had a really good burrito for lunch. To me, this quarter seems maybe it's make or break in terms of maintaining the company's growth status. It will be tough. My nomination for the best quarter this whole entire week, ServiceNow. Bill McDermott's cloud software company, which I think will have the most AI for any tech service company backed up by big orders. Bill's quietly become the most successful non-mega cap CEO in the entire market. It's a solid opportunity for next week, or next year for that matter. I also think the heavily shorted Carvana will blow the doors off on reports Wednesday night. I saw another short story reported about it. You know, it's getting tiresome. If you want to own a gold stock, don't own Newmont, which is disappointed. Own Agnico Eagle, which is incredibly low finding cost. That's what matters. Thursday morning, we've got another company that should report an enviable quarter, and that is MasterCard. You can put this one on autopilot. MasterCard's going to be great. I mean, it's like I saw it, the script in my sleep. How about Eli Lilly? Now, I hate to say it, but it's become luckless. If the company doesn't have a new use for Zepbound, the revolutionary GLP-1 drug, or announce the date for the pill version, the stock's going to pull back to the 700s from its current 825 level. It can't get out of its own way. After the close, we hear from two controversial stocks for different reasons, Apple and Amazon. They could not be in more different shapes right now. Right now, Amazon's web services business, once the jewel in its crown, has become an albatross around the company's neck. I think it's incorrect, but that's what the street is saying. The stock, which has been the least of the Magnificent Seven, needs to see Amazon Web Services grow from high teens to the low 20s, or else, well, we're not going to have a rally. Apple, though, a week and a half ago, I was worried. I wasn't worried about Apple because it hadn't been moving. Now I'm worried. The stock's been bobbing along the trend line. Now it's exploded higher. I wish it had sure waited to the quarter because the expectations are, let's say, huge. And that said, Apple should have a good multi-year story to tell. And I'm sticking by my own mantra, own Apple, don't trade it. Finally, Friday, we have, look what it is, right? Chevron and Exxon. I got to put this is going to be my, we use it as my emoji all next week. They're called emojis. Two laggards that are linked to the price of crude, which means it's very hard for them to get any traction, are Chevron and Exxon. Bottom line, I wouldn't be fretting so much about next week if it weren't for today's incredible rally that took tech to the moon, especially quantum. But the unrestrained nature of the move makes me feel that there has to be a trick to go with today's treat. Otherwise, you might as well abolish Halloween next week and call it an early Christmas. Mike in West Virginia. Mike.
Hey, Jim, returning acolyte, Mad Money Mountain Mike from wild, wonderful West Virginia. How are you?
I'm loving West Virginia. I mean, I'm right back there. Country road, right? I mean, I'm looking at Regina Gill, my excellent executive producer. She and I know that. What's up?
We'd love to take you home. A compliment and a riddle. Who is slim and trim but has a wide moat? You, baby, one of a kind, and we appreciate you.
Wide moat? I got to figure that. But, yeah, I like the slim and trim. I'm looking at Will. Maybe Will tell me the wide moat.
I've been dollar costing into Berkshire Hathaway throughout the year, Jim, and it occurred to me that it might be smart to think of Berkshire as a common man's home office. Why not let the Oracle's acolytes decide when to hop out of
I totally agree with you. One of the things I mentioned, and I didn't mean to be critical on how to make money in any market, but, Warren says, why not just own the S&P? Well, how about if someone said, why not just own Berkshire Hathaway? They did a heck of a lot better. Hey, you know what? I mean, sometimes there's a purloined letter in this business. Let's go to Jerry in Missouri. Jerry.
Hey, Jim. Thanks for taking my call.
Of course. Jerry, what's up?
Short and sweet. Do you see AppLovin returning to the highs experienced back at the end of September?
Yes, I do. AppLovin is loved appin'. That's the way I feel about it. AppLovin and Palantir, they almost trade together. You can't miss them. AppLovin is a winner. Next week is the Gauntlet. Now, I'm not just talking about that movie by Clint Eastwood, which I happen to love. Yes, right? Molly No Show. I wouldn't be so concerned about it if tech didn't rally so much today. And quantum. Best to keep your guard up because it feels like there has to be a trick to go with today's treat, doesn't there? On Mad Money tonight, the consumer packaged goods space has been a laggard in this tape, so what should we make of a company like Procter & Gamble after its very good report? I'm going to give you my take. Then you called in and you stopped me on this Globant, and I did a lot of work, and I got to tell you something. Ben Stoto and I are a little bit confused by why so many people like it, and it's Friday in Cramerica, which means it's time for MI Diversified. I'll put in your portfolio to the test and see if they can handle whatever the market throws at them. And there's a new twist, too, so you want to stay tuned, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.